right, so in this video, we're going to be talking about stacks. I'm going to break down step by step why I'm personally taking along here. Now, obviously, can't predict the future, but I personally think that this is a really solid risk reward play to be longing stacks at around 67, 66 cents. All right, so just cycling through our RSIs, the 4-hour RSI is above 50, which is a good signal. It's healthy, it's bullish. We've reclaimed the 50 level on the daily RSI. And if we go to the weekly RSI, we're also above the 50 level on the weekly. Let's go back into the 4-hour chart and let's break down each of these levels step by step. So first of all, it's going to be difficult to see, but we have three, or what I refer to as triple confluence across all of our indicators. Three levels at 87 cents. You can see that was just the perfect resistance. Right. And we're also seeing the same thing, similar strong support here at 65 cents. So let's break down exactly what these are. So let's get rid of everything except for our risk reward levels. I'll clear this off. So if we just isolate for the move from our local high to our local bottom, and we measure out our risk reward levels, we see that the 3-to-1 risk reward level, which is a very important one, comes in at 65.5 cents. And what that means is as price drops below 65.57 cents, you can no longer get above a 3-to-1 risk to reward, with your reward being a new high and your risk being a new low. Right, so the incentives just shift, right? The incentives shifts, or sorry, as price drops below 65 cents, you can start getting 3-to-1 on a long, right? So as price drops below this level, the incentives increase for going long. And it's not a huge major incentive, but it's one incentive in the market that we can isolate for. So we can also isolate for leverage trading incentives in the market. So we very clearly see if we throw our long margin pressure levels up here from our most recent low, as price dips below 65.57 cents, you can start getting you can start going long on 3x leverage, right? Start going long on 3x leverage while maintaining a liquidation point below this wick low, which is going to be considered support. So you can have a cohort of traders that are going to want to go long below 65.5 cents, 65.57 cents, because it's going to allow them to keep their liquidation points protected against this most recent wick low. Right. We also can do the same logic, apply the same logic off of our short margin pressure levels or off of our local high. And we see, again, these levels highlighting very tight confluence between all of them, right? 65.5 cents, 65.58 cents in this case is where you can no longer short on 1x leverage while maintaining your liquidation point above this local high. So the incentives to short decrease, and you can kind of see where this level has just come in as support. Now, did we go below it? Yeah, we went below it, but now we've reclaimed it. So we're just trading the level. So this has obviously been a key area of interest in the past. It's been a structural level as well. We initially held it off of a short bounce here, sorry, a small bounce here. And then we reclaimed it. Now that we've reclaimed it, this, in my opinion, is bullish. We've reclaimed it. We've got bullish RSI on every time frame. We look at our downtrend level here. We kind of had a fake out breakout yesterday, but now we came back down, tested 65.5 cents, and now we've reclaimed this trend line, or we've rebroken this trend line. So there's just a lot of things firing here to make me believe that Stacks is going to be moving upwards from here. Of course, there's nothing you can do to be 100% confident in really any trade, but ultimately we're just trying to play the probabilities here. So these are so tightly, these have such tight confluence. Honestly, I've probably never seen this before, where within down to the fractions of a penny, down to the thousandths place, these have really, really tight confluence. So this is a really nice area, in my opinion, to be longing. And our target is really simply just the triple confluence resistance zone that we've already seen hold as resistance. Of course, we'll move our stop loss up along the way. Maybe we just get one of these and we start ranging. But either way, we're going to be locking in profits along the way if this trade develops in our favor. 87 cents would be our resistance level. Guys, thanks so much for tuning in. Please drop a like and consider subscribing if you're on YouTube, or if you're on Twitter, consider following. If you want access to these indicators that I'm using, that I use to trade off of, go check out the indicators bundle over at Sistine.ai. You can also get access to them if you sign up for the Research Hub. The Research Hub, actually, we called stacks at around 28 cents. We saw the Bitcoin ordinals narrative emerging and thought that that would benefit stacks greatly, and we called out stacks as being a coin that was probably going to benefit from that when it was only at 28 cents, and then it just completely ripped. So yeah, guys, thanks so much for tuning in, and we'll catch you next time. Peace.